Hello and welcome to World of Oil Derivatives. I'm Greg Newman, the CEO of Honest Capital Group. In today's episode, we're looking ahead and shifting our focus to the role hydrogen could play in the future energy market. Joining me to discuss this is co-author of Touching Hydrogen Future and management consultant Erik Rakhou. This free-to-download book, Touching Hydrogen Future, offers a vision of the potential of hydrogen economies around the world in decades to come. So a quick reminder before we get started, this podcast is available on YouTube as well if you prefer to watch it there. But welcome to the podcast, Erik, and thanks very much for joining.
No, it's a pleasure, and loving always every opportunity to talk about Touching Hydrogen Future book. Now downloaded in more than 100 countries, more than 4,000 times. So it's exciting time, and it seems hydrogen is having the renewable and also not so renewable wind in its back.
Yeah, I've got to say before I just dive into questions that there's a lot of talk, as you say, a lot of people are interested in this topic, decarbonisation, but it's the first proper, comprehensive, quantifiable analysis I've been able to digest properly. So I was really impressed with the book in that sense, even before it got into hydrogen, really breaking down the reality of the decarbonisation process we have to undergo. And you've done it over, a course of, country by country. And I've got to say, very educating even before we got to the hydrogen. So really, really great stuff there. But just to start with, what was the general motivation for you to write this book?
It started really with finding out that there was no good but free book, because I think there are some books that let's say starting 30 euros, Europeans and Americans can buy, or 30 US dollars. But I felt hydrogen is a global opportunity, particularly if you look to who may be the future exporters of green hydrogen. Those are the countries that now, at least in kind of oil terms, nobody really heard of, being Chile or Namibia as examples, I guess. And if you think about it, there is a huge interest in the hydrogen economy. So that was first, like, okay, we need a free book. Second, if you think about the scale of energy transition, it's amazing. And we kind of lack people. I mean, even if we probably retrain all of the oil and gas engineers, which is happening in some way through the oil majors' involvement in hydrogen economy, we still would require additional people to make the hydrogen economy happen. For that, you need to make young studying people enthused globally. And that was a second trigger. So when I was talking to one of the utility CEOs in Europe in autumn 2021, she said to me, I'm really worried, Erik. We may not have enough actually people who are able to build energy transition, and hydrogen included. And that's what kind of led to thinking around the book, and from one things to another.
And it's very practical steps, as I'm saying. Like for me, instantly, running a trading business, it's a few steps down the line, but it's you can see how it can tangibly be something. And we'll go into more of that detail later on. But just sticking to the book to begin with, just wanted to focus on the Chinese example to begin with. I just really interested to learn that, of course, the 30% of carbon emissions comes from China. I did know that, but that's so much of the decarbonisation they can achieve can actually be done by efficiency. And he was making that point about the furnaces in the manufacturing processes, of which there's around 120,000 odd. Are probably ran mostly by coal right now, and just by recycling and running by oxy-fuel, as you put it, and hydrogen, a huge difference can make. How much proportionately can that make a difference just by efficiency alone? Is that something that you're focusing on initially, or do you think is still part of the overall process?
So let me unpack China maybe a bit from my point of view. So first of all, to zoom out for the listeners, we have 27 countries across the globe covered in a Jules Verne kind of travel style manner, going across the globe in 2030s, 2040s. And the chapters are written by authors who are either spent really big time kind of in energy and around this and dive in, or actually quite young students who actually had the time to dive in as well, and then were, let's say, supervised by experts to review their sections. So the China section has been written by Joachim von Scale, who is also global, has a global leadership position with Linde, one of the key players in hydrogen space. So I must say it was quite a complex to find the best author because yeah, Chinese economy is so important for the world. And fortunately, he took the challenge, and he also worked together with some external experts from some of the embassies involved in China. So he really took his time to research. So to say, Chinese chapter is not just, let's say, future gazing, but it is based on loads of data. Now, going into kind of opportunity of China, I think if you and without going in tremendous amount of all the numbers in the section, I think one thing to mention it could go up to 20% of primary energy mix of China by 2060 if you use hydrogen, and that includes even after energy efficiency solutions. So basically, while let's say Chinese population rises and you do the energy efficiency you just referred, Greg, even then you still have a tremendous decarbonization challenge. And then part of that challenge, that's very important because hydrogen is not the thing. It is typically the second best after electrification. Then you can use hydrogen solutions. And I think that is kind of a key argument that Joachim very helpfully made in his China chapter of the book, that you should focus on energy efficiency, and there is loads to be done. And as we know, Chinese economy right now also produce a huge taker of current hydrogen market, which is all of fossil and carbonized. So we need to decarbonize that, and we can then also take other opportunities and invest in energy efficiencies. So hydrogen is really a game of and where energy efficiency and electrification come first, and hydrogen comes second. And China is a good example of that.
But it was just great to see that there was a practical initial step with data, like you say. And am I right in saying these furnaces you talk about, well, that's talked about in the book, that is mostly where the coal demand comes from and why China just have this insatiable appetite for coal at the moment?
Yes, so a
Yeah.
huge amount of current hydrogen demand is through the, let's say, produced through coal.
Yeah.
And obviously, one other route China may consider, and they're exploring that, is a carbon capture and storage solutions. If you kind of zoom out, and that's not in the book, but just from my knowledge as a general energy transition expert, um, there is, I think, last time I looked around, there's about 15 or 16 huge carbon capture projects. So obviously, in parallel, other solutions are being explored as well, which could allow China, if it decides to do so, to, let's say, pursue use of coal and capture carbon in different ways. But hydrogen is another vector they're heavily looking at. So yes, it is cold now, but it is a good question, I think, and the jury is out. So the China section of our book offers one vision of the future where it could go towards hydrogen. It is plausible, I would argue, and that's for readers to decide if perhaps carbon capture will also have a fair chance.
But generally speaking, hydrogen is mostly by coal, and that's what we call brown hydrogen.
Sure, in China, yeah, and I think it, yeah, in lots of rest world economy, it's much more through natural gas, and that's what we would call gray hydrogen.
But then you've talked in the book about how there's going to be that transition into mostly green and the rest would be blue. But just wanted to break that down. I mean, the blue being, in my understanding, anything, well, nat gas essentially, i.e., grey hydrogen, but then with voluntary offsets. Is that fair to say?
Um, sure. So the blue hydrogen is not with voluntary offsets. It's an interesting construct. Sure, you could discuss about that. Currently, the more let's say common translation of blue hydrogen is doing the steam methane reforming process to get from natural gas to hydrogen, and you get CO2 in process, and that CO2 is then captured and potentially stored underground or reused in products. So, and that process where you take the current so-called gray hydrogen and get the CO2 captured and stored or reused, that's called blue hydrogen when you reach that. I must say the whole color thing is very confusing if you're new to it. I remember some years ago, when I made myself the transition from working, let's say, renewables and natural gas markets to also being very much involved in global hydrogen discussions and work, I had some trouble getting through the colors
Yeah.
because every day there was a new color. Because also, if you produce, for example, use nuclear power to produce power and then use it for electrolysis and then break down water into hydrogen and oxygen, because of the nuclear power starting point, you would, for example, call it pink hydrogen sometimes. So there are more colors in the debate. I think in the future, if we look where this may be going, I can very much imagine that at least every hydrogen molecule will have to have a certificate in order for it to be globally traded, which shows what carbon footprint it has, right, based on life cycle assessments. And I think that is a big question for the future of hydrogen traded globally, that we get to a system where we any client in the in the value chain can see what has been the carbon footprint of the hydrogen they're either transporting, trading, or using. And that's really getting from colors to carbon footprint. I think that's a journey we need to make.
I can't help but think we can start that journey right now. And that the first big step, like you said, like this is why I like the book so much, because it was able to break it down and I was able to just be educated straight away. But as you said, it's quite confusing. So do we not just need to start with a standardized template? And Carbon have tried this to some extent, but then like some of the things you're saying kind of just points to why there's issues, because there isn't a standardized carbon market even. So how are we going to get a standardized hydrogen? I think, correct me if I'm wrong, but that's kind of one of the most important things. I guess you are kind of saying that, but starting off with a standardized format for definitions and then price transparency on those definitions. There needs to be a third party or independent price assessment agency essentially to do this.
Yes, and we see some initiatives in the market, right? At least in the past, I've been in touch, for example, with Platts, who are trying to achieve that. I'm aware of an AAX exchange looking to how to kind of work towards standardizing hydrogen trading in the future, also being part of the H2 Global Initiative, which is a kind of interesting German government initiative to create global trade. I'm aware of High Exchange in Rotterdam looking at kind of thinking how should we start preparing for global trade to come. So there are some initiatives, but I absolutely agree. I think, like in oil and gas, there is really space for competition and innovation. So, kind of, I would say any player in facilitating trade looking to it now is still a really good moment to come in with ideas, and particularly if you already have an existing ecosystem where you're either involved with, let's say, with any global commodity, be it oil or natural gas. I think those players will have a very natural position to kind of start helping building an ecosystem of trade for hydrogen. Because in a way, if you let's zoom out, like where are we in that global market right now? It is very much hydrogen clusters, so around industrial hubs. Pilots are being built. If you're kind of looking money wise, we are talking, let's say, typically, let's say, right, 50 to 100 million euro type of projects now in discussion and kind of looked at. We are going towards multi-billion projects, but those are not yet being FID'd. We're waiting for some regulatory clarities. Typically, there are notable exceptions, right? We've seen a huge project in Mid East, in Neom, being sanctioned, but typically we are kind of still in the three-digit million type of project stage. So the market is kind of moving up, but still kind of very localized, regionalized. Some pipelines are being prepared to connect those hubs. So that's where trade could start emerging. We see Germany, Netherlands, and also countries around that lining up for that discussion. So Northwest Europe, clearly also UK. That's where it's likely to start happening in few years out. So 26, 27. So that's where clearly trade will emerge. I can very much imagine US to follow a similar path, also given its rich history and positioning on colorless hydrogen. I think those two markets are kind of to be watched, and it is now time probably to start preparing a certain standardization thinking
Yes.
around the hydrogen. So yes, sorry for a bit lengthy answer, but I think
Oh,
it's
awesome.
worth giving context to those who listen before answering just your question about standardization.
No, no, absolutely. No, no, of course. And I think this is the challenge that we have because actually, even when you talk about oil contracts, to this day, there's this, what I feel, a serious like misunderstanding of how you build a derivative ecosystem, at least. But that, even before you get to derivatives and the need for that, you need price transparency and you need standardization. So, what is a benchmark? People seem to think that a benchmark should be a really well functioning, physically delivered mechanism. And really, people just need a price. And they know that their underlying physical might not necessarily marry exactly to that price, but they need a reference point. So I think there's a danger of overcomplicating these kind of standardization things. And if you look at, say, liquid natural gas, that has become its own market. But really, it's really struggling because it doesn't have enough liquidity. It needs more benchmarks to link things together. So that there's going to be a big challenge in some respects if we get too complicated with it. It just needs, in my view, regional benchmarks, maybe only US, Europe, and Singapore, like we have in oil, and that will get things going. There's enough benchmarks to start trading. But there's so much before we get there. Like something I wanted to bring up as well. You were mentioning about the pipeline infrastructure. So there can't really be trading unless there's a good mechanism to trade physically around the globe and kind of fulfill inefficiencies around the world. And this is like the Mark Rich stuff in oil. He created this spot market and allowed it to then flourish and then become derivatives. So with hydrogen, in the book, you say that the issue for China in particular is the exposure to the natural gas volatility and also the pipeline infrastructure. They're not likely to build new hydrogen focused pipelines in parallel with the natural gas pipelines. So they're going to have to use the natural gas pipelines, but then isn't that a real too much dependence on grey hydrogen and not the? Do you see what I mean?
I think there's in a way to unpack that. So one of the first of all, it's a good question how hydrogen will be transported between, let's say, the ones who in the future will want to trade it, right? So
Hmm.
it is already emerging that there is various use cases. So in various places, you will need hydrogen at different times. So that just by nature of it will create a notion of trade because it means that one party will have a surplus and another one, just because of economic cycles and the way use cases work, may have a shortage. And then you either have a storage, which is possible. There are multiple ways to store hydrogen, or you trade, and that for serving portfolio you need physical trade. For that you would need, for example, pipeline connections, and you can repurpose natural gas pipelines. And there is very good research done by European players, also in the past by American players on this. So it is possible. It's also good to remember hydrogen transportation through pipelines is nothing new. Players like Air Liquide, Air Products, Linde have been doing it for decades. So those are kind of the incumbent players of the current hydrogen market before it became global and for accessible, let's say, for thousands of players instead of just top three. So hydrogen transport in that sense is not new. So it's doable and there is a repurpose. So that's on your China point. Maybe an interesting point about the global trade, and I like your hubs. You mentioned Singapore, something in Europe. I would argue Rotterdam would kind of make a good Brent-like reference
Hmm.
here, and for US, I would go with Houston if you need a geography, also because of the blue hydrogen positioning, etc. So I think if you think about those markets, Singapore, Houston, Rotterdam, if there will be also a question, can they correlate and why, right? And that means then hydrogen would need, at least in theory, to be transportable. And there is a couple of solutions going right now. And all three are, I would say, still, in 20 years' time could win. So there is the liquid hydrogen, where Kawasaki and Shell had some experiments around and had a first ship. frontier, Suez frontier, and more is now kind of bigger experiment piloting is considered. There is a liquid organic hydrogen carriers, so there is some good work on that where you can reuse existing oil transport infrastructure. So that could be quite interesting if that is proven commercially scalable.
Do you just mean cargoes there? Bulk
Yeah,
cargo?
yeah, just cargo ship. Yes,
Yeah.
so that is very interesting. I think also particularly given your audience focus, kind of. So definitely one to watch. It's shortened as LOHC, so liquid organic hydrogen carriers process. And then there is the ammonia game, where basically ammonia is used because of its properties. Existing ammonia tankers can be used to transport hydrogen as being part of the ammonia molecules, NH3. So, but that when you basically make ammonia and again crack ammonia back to hydrogen, you lose energy. So if your starting point is that you have limitless stranded renewable energy anyway, then it's fine, and that's starting point for some of the projects. So we also see now ammonia projects, input projects being announced. So there is one in Germany announced, there is one in Rotterdam announced, and I'm pretty sure as we speak, maybe even we go live, I wouldn't be surprised if there is a couple more announced, right? And then there is also other developments in this area. So this transport thing is really booming in terms of R&D and pilots. So e-methane. So that one, for example, recent announcement involving a company called TESS and E.ON, where they basically said, look, we're gonna use a hydrogen to make in a methanation process where we create synthetic gas and then transport it using LNG infrastructure, basically e-methane, and then if necessary, we can then again when this arrives to Europe, split it up again in hydrogen and into CO2 and then transport CO2 back. So there is like a whole cycle created. So you're using existing technologies. So methanation is not new, using natural gas and breaking it down into CO2, and hydrogen is not new, but they kind of coupled that all together. And that's also one I'm very interested to watch how it evolves. And that's just an example of how much creativity there is in terms of getting the question, how will we be transporting at lowest cost hydrogen derivatives globally? But there is work underway. So that also promises me that as, let's say, the market develops over the next 5 to 10 years, we'll also get some interesting correlation between the Houston hub, the Rotterdam hub, and the Singapore hubs you referred.
So I think the elephant in the room for me is, and you do mention it in the book about the costs, if it's got to be economical. In my view, if traders in particular, people can make money out of this, that is when it's going to work, right? And all the things you're saying, the different modes of transports and breakdown, that is what traders want to hear, the physical traders. Their job is to manage all these differences in specifications and deliver on-spec product that might be hugely varying from different regions and all that, but that creates price dislocations and obviously opportunity. So I think that is very encouraging in a way, because if there's a lot of specification nuances, then by definition there will be work for the traders to do, and they can be invested in this project essentially from a commercial point of view as well, which I just do think is very important. Like that, this is what, even in oil, when new contracts come out, I can't help but say immediately, look, why is anyone going to trade this? And they say, well, because it aligns really well to the physical. I said, no one cares. We want to make money, right? That is the job of a trader. We're in here to maximize revenue. So if you're going to come and tell me there's a more efficient way of trading physical, then I'm not going to trade it. Even though we don't trade physical, we trade the derivatives, but ultimately it's the same thing. If someone gives me a physically delivered derivative contract, well, why would I want any exposure to that? I need to be in a market where I can have my own proprietary strategies and make money. And I think a lot of people think that way. And so I think that kind of embracing capitalism in that way, I don't know if that's controversial or you agree.
No, I think it makes sense. I think traders, I mean, we all have our views. So my personal view is trader community has a very useful function. I mean, and it's absolutely fine. I think that traders come in where there's lots of complexity, information is king, And of course, there is now, since the last crisis, there's a lot of regulation now to watch out for. What's kind of but subject to compliance, I think there is a huge opportunity, particularly I'm assuming in the early days of hydrogen markets, similar to as we've seen that in natural gas and power markets, for those who kind of able to manage the complexity, understand which products, how to, let's say, manage the time and location arbitration. There will be money to be made, and that's fine because in return, I'm very hopeful there'll be liquidity and price transparency eventually. And on the back of those traded, let's say, values of hydrogen, end users will be able to close long-term offtake contracts where they need clear price references, and they need to understand, how are they going to pay for hydrogen or its derivatives, let's say over the next 10 years. And they need understanding and access to traded markets to manage some of the risk in that. So I think there is some really useful work to be done by trading community. Yeah, and I'm hopeful you guys will be part of that as well.
Absolutely. I mean, there's just so many examples because even the shale oil boom, I think people, I don't know if it's very well understood, but whilst there might have been all these, advances in technology, a lot of the production boom was based on the fact they could get financing based on the resources they had, proven resources they had, but only if they went and hedged immediately, right? That was the agreement with the banks. So if you can hedge forward production at a cost-effective price relative to production, the banks will finance you all day long, and it was a self-fulfilling thing. And then that flow that goes into the derivative market means there's more derivative participation, more liquidity, then more price transparency, and it all starts to work. My worry with all this is the worry I have right now, which is there's whether you like it or not, even physical commodities and pretty much everything is governed by financial systems really now. And it's a derivative of those things are negotiated to financial systems now, a financial systems price. So we don't trade physical oil around the world in terms of there's no physical oil price. We trade at negotiations to the benchmark price like Brent and WTI. So in order for that to become established, it needs to be protected by regulation, which is actually a really good point. That's the framework existing there can be hugely annoying because it's quite restrictive if you don't understand things, and then suddenly you can't trade because of some silly understanding from the regulators. You don't understand how to offset things and all these kind of issues. So there needs to be a kind of big effort to ensure this ecosystem is protected or understood from a regulatory point of view, protected by the banks and the exchange, right? Because they are going to be financing access to the derivative market and to the ultimately ecosystem you talk about. And I think the banks are very willing to do that at the moment because it's the hot topic, right? There's endless amount of greenwashing everywhere. So no one's going to have problem getting financing initially. But like we've seen in oil, nat gas, nickel, when the financial system is fragile, it can really disrupt everything. So there's got to be that commitment to, I guess, proper financing the whole thing with, a lot of emphasis on, when I say protection, I just mean not letting things go awry. Like for instance, LNG. Like everyone wants to see liquid natural gas boom, but like Gunvor CEO came out and said we can't even hedge a cargo in this market. There's just not enough liquidity, and that's because natural gas prices are a joke. Right? They're all over the place. That's because we have a lot of leveraged speculation, a lot of obviously geopolitical concerns, but the system just isn't working. There needs to be more effort in that, because if that is robust, the knock-on effects are actually all the way down to the physical, which can then work very well, and then we can have what we all want to have. I know this is very financially nuanced, but I do see them so linked, and I see them very practical
I,
steps to get there.
I think it's a very good point that the financial ecosystem kind of needs to build up. I think there is a good opportunity, having learned from LNG markets, oil markets, which are both global, to take some of that learning and kind of start timely. I think starting timely is a really important point because, like I said, we're probably 5 to 10 years away from things going quite big. Right now, they're already, well, I guess, in the hundreds of millions of euros, but they're not yet in the billions. So now is the time to prepare. So I thought it was very timely, for example, that I was asked by a global insurance magazine for their kind of global insurance audience to write an article about what is hydrogen, why is it relevant to start thinking about it for global insurance industry. So it will come out on 5th of May. And and I thought first, I thought, insurance, but then I started thinking about it, right. So that's a really good sign. It means also the
Mm.
global insurance players are starting to think about how are they to prepare to insure those cargoes, for example, in global value chains, which will go in the billions of euros, to be prepared for the trade. So it's the financial institutions, both banks but also insurers, that also need to start thinking now, so that when we start running, the questions around how do we make sure that liquidity is concentrated, how do we make sure that if there is a rogue trader that doesn't damage the rest of traders, that there is a clear, let's say, rules around collateral by the exchange, etc. So I absolutely agree that financial ecosystem around trading is crucial, and there is a good opportunity for hydrogen actually to start thinking about it in advance, and time is now.
Just an anecdote that came to mind when you said the insurance point. I think I heard that 10 or so years ago, as Elon Musk was building out the electrical vehicles, he bought up an insurance company because he started to be thinking about autonomous driving. And then you think if that actually gained traction, you need the insurance. So as you say, it's a significant step because it means you're being serious about it. But look, as you say, the time is now, and I now full credit to you because having read this book, I now feel exactly the same way. And I think that we just need to get started. Let's start with this price transparency. All I can do is the financial system, the derivative aspect. I don't see it as particularly challenging. What is the cost of the natural gas prices in Europe? How do we convert that into an index? The cost of steam methane reforming, like you said, the variance in the physical price between hydrogen and nat gas that we've seen. We can do analysis on that, and we can create a standardized formula, which we have done, had a go at it already in preparation for this discussion. And we've got a live API price for hydrogen in Europe, for grey hydrogen, to be clear. And to get it to blue hydrogen or to get it to green hydrogen, you can make methodical steps. Like a blue hydrogen, you could say, well, what is the price? Well, how much carbon is involved in the steam methane reforming? And then times that by the voluntary carbon market price. And then that will give you effectively a live blue hydrogen price. So we're going to start there. And as I say, full credit to you because this is now starting this ball rolling. It seems like practical steps. And hopefully the discussion keeps on happening. And there'll be a statue of you one day once hydrogen is huge.
I'll just take the opportunity to say thank you for creating the Rakhou index, but obviously it's
Oh, it already exists. Okay, yeah, fair enough. Fair enough. Well, yeah. I
no,
mean,
but it's a slight tongue in cheek. But it sounds like a good opportunity for the market, and obviously it will be very interesting to see how this will get used. Because I think, like I say, it's a good competitive field out there, and
yeah.
very very. I like the creativity to use the voluntary carbon markets to get kind of to an assumption around what it would make to go from gray hydrogen to blue hydrogen. I think you'll also need to make some assumptions, about upstream methane emissions, and obviously working with averages. But there are good studies and assumptions around there, so it's a really good start to start publishing a mark there. And I think it's also really important to have that indication what it costs to go from, let's say, carbonized hydrogen to decarbonized hydrogen, because at least in Europe there is a huge focus on decarbonization in parallel, next to energy security, which hydrogen also provides.
Absolutely. I mean, I could just so much to talk about, but thank you. I've taken enough of your time. That brings us to the end of the episode. Thanks, Erik, so much for joining us, and thank you out there for listening. Don't forget, you can follow us on social media by searching Flux Liquidity Hub on Instagram and Flux-Live on LinkedIn. But for now, it's goodbye.
Thank you. Bye.